And the current SBA 7A loan interest rates today are. Hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert. And today I will be going into the SBA 7A loan service / product, the expectations, how you can get bridge funding in the meantime while you're waiting to get approved for that SBA 7A loan. And if you need funding immediately, so you don't have to wait 4 to 6 weeks, in the meantime, you have it, as well as EIDL loan alternatives to the SBA 7A, such as unsecured financing, secured financing, term loans, lump sum, lines of credit, equipment financing, whatever that may be. So I will be jumping into the share screen in just a moment to reveal to you what the current SBA 7A loan interest rates are, but most importantly, why you should be getting in now. As the time that I'm releasing this, it is 1:50 Pacific Standard Time, November 8th, 2022. As we're rolling into the new year, before winter time, get ready. Do not wait, whether it's an SBA 7A loan or not. But at the end of the day, what doesn't necessarily matter most are the interest rates, rather the benefit exceeding your repayment. And I've said that multiple times. So if you've heard me say that and you're like, well, just so you know, we need to hear it over and over. So what are the current SBA 7A loan interest rates? Well, that will vary depending on the type of SBA 7A loan you get. The maturity in terms of the term, the amortization, or in other words, the remittance on how you're paying the principal and what you're paying towards the interest and what's accruing over the years, how we amortize it over a 5 to 10 year. Now, how do you get 5 years versus 7 versus 10 years? So you have to look at the different types of SBA 7A loans in the market today. And if we're looking at an express loan, that's normally up to 150 or up to 350,000 for the most part. But there are those ranges in between, as a minimum, maybe of being about 20,000. In other circumstances, another lender would like to see about 50,000. So it just depends on the type of an SBA loan you are getting. But an express loan, you can expect to have higher interest rates. And the way there's a direct proportion and indirect proportion. So think about it like we're going back to school and we're doing division or those chemistry equations, or we're seeing as pressure goes up, what happens to the volume? It decreases. And so when you're looking at an express loan with minimal amount, let's say about 25,000, you start off with 25 to 50,000. And usually you would expect there be an interest rate of about 3.75 to about 4.75 on top of the base and or prime rate, which is what we go off of. So the prime rate today, and I made a video on this that I'll link you guys to down below in the description to learn more about what are the prime rates and what does this have to do with anything. So prime rates right now being at 7%. So 7%, the prime rate, plus about 20 to 25 or to 50,000, from 25 to 50,000 more so in what I'm seeing today on the approvals, that you can expect there to be between 3.75 to 4.75% on top of that, if not 6.75. And that's a little bit absurd. But if you're calculated being a higher risk, less cash flow, then these are the things that happen. So if you're at 7% plus 4.75%, you're in that 11.75% more or less at a minimum base, there being at about 11.25%. Now, if you're looking for funding, and that can fluctuate. So we can be sitting between 3.75 to 4.75 and just a little bit under. But if you're looking over 50,000 and you qualify for over 50,000, then you can look maybe at prime rates plus 2.75 or prime rates plus 2.25, I should say, at about probably 9.25 plus at most 4.75%. But that's too much. We drop it back because you're looking for more than 50,000. And if it's more than an express loan at 350K, you're looking at right now 7% plus 2.5%. So it can fluctuate 2.2 to 2.75 and sometimes a little bit higher. And that can be fixed. Sometimes it's variable. Variables we can look at this market and say it'll be sometimes a little bit less than the fixed rate. So if it's variable, you may get that 9.25%. If it's fixed rates, you might fall between 9.25 to 9.75, if not more, 9.75 to about 11.75, getting closer to 12%, in some cases a little bit higher. But that's what you tend to see right now in the market. We're far beyond where we were before, just previously being at that 6.25% or so, 6.5, 7%, even before 6.25%. These are not EIDL loans where you're looking at 3.75% for profits, less than that if you're nonprofits at about 2.75% or so. And then the EIDL loans, we're trying to figure out if we can decrease that to about 1% for all industries, not just restaurants. So with you knowing that the interest rates for the SBA 7A loans are increasing, and you see the prime rates and the adjustments on top of that on an additional amount, associated risk level, debt service coverage ratio, and a few other things that I might jump into here. I have it all written down here. I did a lot of examples. I'll give you one of them. This is what I do daily. And so let me jump into the share screen so I can show you. SBA 7A loan interest rates and hybrid SBA 7A loan up to $5 million option, express and standard 7A. Now, if you're looking for a line of credit, that can usually cap out at about 7 years for that. So plus 0% interest for 6 to 18 months and up to 150,000, if not 250,000. I'll be getting into that towards the end. So please stick with me so you can learn more about how that actually works. Now, I didn't say this earlier, but if you're watching me in the live, please give me a hashtag live, or in the replay, please hashtag replay so I know the time interval. So the hybrid SBA 7A loan option. This is going to be the best SBA option to get started with if you are profitable with at least 2+ years. Recent is best with strong credit history and long-term for bigger projects with a greater return on that investment longer term. So it makes sense to give you that 5 to 10 year working capital, 5 to 7 perhaps if it's an express loan, sometimes even less, especially if you're looking at an acquisition loan. You might even get up to 3 years because they become more expensive if you're doing a seller financing setup. So with strong credit and longer time for bigger projects with a greater return on your investment, and it's longer term, makes more sense. And it's also for operational expenses, but not primarily just for relief in operational expenses. And that is a pivot that, yes, you may have a stronger use for that, consolidating, refinancing. You have expenses, rents, mortgages, and things like that you need to pay. Well, okay, it makes sense on the business side. What are you trying to do on your personal side? Now, you also want to come at the table with, I have this project, I'm buying multiple pieces of the equipment, or this is what it's valued at, and then I need to just be ready to have funding available. I may use this in 2 years' time, I may use more of it, and it makes sense for you to get it. But not everybody will be approved for this. So what I recommend, let me come over here. I apologize if it's dark. I have the blinds open. Sun is out a little bit, but the light doesn't come in here. See this? You wouldn't want to see that. So down below, I have a business questionnaire form. You can fill out. I may show you at the end of this. We'll try to wrap up in less than 20 minutes if possible. And if you fill that out, you'll get a very personalized and customized email response on your best funding option and options, thoroughly broken down from yours truly. I am an analytical person. I can't even get the word out there. I am a very meticulous and analytical, there it is again. And I take my time to do the numbers and make sense of it, how it all looks. I can give you guys a pre-underwritten file, a ballpark range even before I collect documentation. When I have documentation, I can do something better with it. But that questionnaire form down below, if you fill that out, take the time to, it should take you no longer literally than 30 seconds. And if you fill it out, I get an email, evaluate, analyze, give you a proper response back via email on your best funding option and options, very thoroughly broken down from top to bottom. The introduction, the types of services, the details to that, numbers if necessary, what needs to be adjusted. And even if you qualify for it or not, at least you'll know what's available, a conclusion on a roadmap too, on what you should do, what I would recommend, and how you can approach this longer term. Because you may not start here with this SBA 7A loan and you're thinking, I better get in because you're telling me I can get prime rates at 7% now. If they were to increase, you're looking at maybe 8% plus 2.25%. So now you're looking at about 10.25% plus up to even more than that. Even past the 11.75, we're looking at 12% plus. So you have to be very cognizant and careful. But if you don't qualify for that, it doesn't make sense. Even the interest rates doesn't make sense. The benefit has to exceed your repayment. At the end of the day, you can look at interest all you want. You can look at the type of repayment, and that may be a significant factor if you're cash flow positive or negative or where you will be. But does the benefit exceed the repayment? Are you taking this money just to save money? Are you using something as a down payment? Are you not using it to grow and expand your business? Then yeah, you may be looking at it differently at cost of funds and thinking over the 3, 6, 12 plus months on what I'm paying if I have a mortgage or if I'm trying to keep rent down or I'm just trying to make sure I have a good enough of a down payment. But if you can get a longer term to begin with, that will be best because then that will drop your repayment. But if you don't start with a longer term, everybody has to begin somewhere and your benefit has to exceed the repayment. So I'm taking 20,000, I'm paying back 27,000. Well, I'm making 30, 40,000 on this. Even in the first 1 to 2 months, I'm giving an 8-month, 12-month term, whatever it is you qualify for. Well, okay, you paid it off early, no prepayment penalty, early payment discounts. Guess what? Do we look at getting you a second round underneath the same lender? And I work with the best lenders and underwriters, by the way. Or are you already set up where we can look at a different type of a repayment? Can we actually add that express/standard 7A loan on top of it? So the hybrid, it is 2 separate loans. One is an unsecured financing product, term loan, line of credit, or cash advance that we can add to you in the meantime while you're getting approved fast and quickly. And it depends on the service. So like a line of credit, it can take a little bit longer than a lump sum term loan or a cash advance. Cash advances are generally faster. It can be same day within a 24-hour underwriting approval process that we go through. And it can be done in-house. So there is an initial soft pull in the beginning. And SBA loans generally are hard pulls, but we can look at this in-house. And I have the best team that I work with again, and I'll line you up with the best lender. And this is what you should do today in this market. Going directly, like I have direct lender partnerships and I have brokerages where I already have those direct lender relationships that I can just say, hey, why don't I just take you to direct lender? Well, no, there's cases for that. And there's a case to be made that you need to do it this way because we need to look at it more in-house. We can give you more flexibility, better benefits, the discounts, if anything. And then it's a longer-term partnership and relationship. And you're doing it most accurately and you're building out everything. And you're like, think about it as a car. You're putting an engine in, you need the motor, you need to put things in, you have an air compressor, you have different units that you're testing to make sure that it is running as smooth as possible. And you don't have any oil running. So you have this Ferrari sitting in front of you, but what are you doing with it? So one is an unsecured financing product, a term loan, line of credit, or it's a cash advance. I see a comment, and I will get to you, Don, in a moment. Appreciate you. Thank you for commenting. How are you doing? I will get to you in just a moment. So again, the line of credit can even be within 24-hour underwriting, approvals within 1 to 2 days. It can be much faster. Depends on all the documentation we get and how extensively we need to look at your file. But realistically, I would even say just between 1 to 2 days of an approval of an offer given in the second day or in the first 1 to 2 days. It can be as much as a week, an additional 2 days added. But it can be very quick on top of a cash advance term loan. But just know that it is much quicker to look through when you're looking at unsecured financing than it is with like secured financing. It may take a little bit longer, 1 to 2 weeks plus, pushed out in some cases. So it can be funded easily and quickly and best used as bridge funding. In the meantime, you can use while we're looking to get you approved for an SBA 7A loan. The other loan, it's a 10-year SBA term loan, express loan, or standard loan. And there's that gap where you can see sometimes 3 years, but more so 5 to 10 years. An express loan, it is very common to see like between 5 to 7 years. So don't always expect that 10-year. And we can make a readjustment on what affordability you have. And I'll go through some numbers in a moment. So express or standard loan, and above 350K, that's the standard loan. There are lines of credit that we can try to add on top, and you can get multiple SBA loans. If you have an EIDL loan, it shouldn't affect this. You should be able to go ahead and go through an SBA 7A loan application process, even if you have an EIDL loan. And I can look to see a little bit more deeper on that extent, but it shouldn't affect it necessarily. And you can get multiple SBA 7A loans. If we have to revisit this, I'll look at forms of refinancing, consolidating debt, which we can do if you get bridge funding right here. In the meantime, one or more of these on top of it before, we can try to add a combination of a term loan and a line of credit, a cash advance and a line of credit. You just have to understand what your use of funds are for. Does the benefit exceed the repayment? No? Okay. Operational expenses, you just want to have money sitting in there. Well, can you get approved for a line of credit? What would be the amount for the line of credit you get approved for? And well, you didn't want just that amount. I actually needed more funding. We can add a term loan and or a cash advance. So, or more so or on that. Which we can get with a letter of intent within a couple of days, but it takes 6 to 8 weeks for you to actually receive the funds. So yes, it's common. We can do it in a month, but if you have all the documentation up front, you are welcome. Appreciate hearing that. And that's realistic when you have the documentation. If we have everything we needed on hand, like I have people right now who are not on it. Like we're looking for bridge funding for them, whether they wanted it or not. Then they're like, can we look at an SBA loan, which I spoke to them about. I'm like, well, I'm still looking for that documentation that I needed, And then it's so extended into like the 2 months. And that's when I'm really getting the documents. And then they're wondering, well, this was supposed to take 6 to 8 weeks. Well, you didn't send me all the documents that I needed. Like we were speaking about that you said you would have given it to me in the next 2 to 3 days, or, hey, this is what you had in mind. Well, let's get it done. What are we pushing this off for? I know you get busy, but if you're using that as an excuse, then you're only using that because something is more important than this. Our SBA loans, they go up to $5 million. A business needs to be generating at least $120,000 per year in gross revenue. Yes, that is a minimum that we're looking at. And that is an entrance point generally for an express loan, normally 150K, which I'll cover right now, in gross revenue, and 660 plus FICO credit score. That's for unsecured products, but realistically, you want to be doing 120, yes, but 150K and above. And if you're just meeting the minimum of 150,000 in revenue, think about it like this. If you normally get approved between 10 to 15% of your annual gross sales, and we also factor in a combination of your personal business tax returns, your profit and loss, the balance sheet to look at all overall debt. Well, with those numbers added, yes, you may be able to get more with an express/standard 7A loan, government loan, than you would get perhaps with an unsecured financing. Now, secured financing, that's another question of what you have. But, well, if you're meeting the minimum of 150K, as we went per our examples earlier, yes, over 50,000 at most, maybe 2.75% interest. But if it's an express loan, those typically with lesser amount that you get approved for, it could be a higher interest. And it could be like, if we're looking at less than 7 years, like up to 7 years, then you're looking at a little bit of a lesser interest. But if it's about 10 years, it's a little bit higher because it all has to fix itself out over those extra 3 years you get the interest on that return that the lender is receiving in the bank. And then that's how it all goes. So you have to readjust for all of that and why the interest is where it is. But at a minimum of 150,000, you may be looking at prime rates, base rates plus 4.75%. So in today's market, maybe 11.75% interest. So you have to weigh the pros and cons. Well, if I'm getting if I have 150,000 in annual gross revenue, but I'm only getting 30,000, where do I fall within that interest rate bucket? At 30,000 and I'm getting an express loan, well, I'm getting up to 7 years, then I may get a little bit less than 4.75%. I might be sitting at 4.25 or 3.75 to 4.25. But does it really realistically make sense for me to get a $50,000, a $60,000 SBA loan if you even get approved for 7 years, probably 5 years, more or less? Does it make sense for you to take $60,000? Now, if you have real estate, that adds more to the equation. We can try to add, what do you have equivalently to that? Well, I have appraised the value of all of this is at 200,000. Well, okay. That brings a little bit more to the table when you have collateral to offer up. It's more of an incentive for us to say, hey, we can approve you for more funding than the initial 60,000 or so. And what the guarantees are, what the guarantee fees are. If you're looking for over 150,000, probably a 3.5% origination, a guarantee fee, all of these little things included. But let me come here really quickly. Don, this is still full doc with tax returns, and that goes for everybody in here watching. And I'll leave the form again down below for the questionnaire if you guys want to submit that. That's what I would do. I have a process, so please fill out that questionnaire if you haven't, and I'll get back to you. So our SBA loans, they go up to that amount, 150K if not 250K for an express loan, up to 350K is what you can see with an express loan, very likely, or even up to 150K, just depends on your cash flow, revenue, bucket, tax returns, profit and loss. I do all of these numbers to pre-underwrite a file before they go into underwriting. So I have more or less the expectations of what, what's going to be the outcome, or have north of 300K and 400K, if not 500K in annual gross revenue for a standard 7A loan. So if I'm going for something above 350,000 and I have no collateral sufficient enough for it, not because you don't have collateral or you do, does it necessarily mean that you will get approved above a certain range? You still have to come to the table with what you have non-asset related. What is happening in your business cash flow wise? How much net operating income do you have? What is your total annual debt service? And what comes about to be the debt service coverage ratio on what you can afford in terms of how much debt you have how much debt you're ongoing, and versus how much you're actually making versus that debt. Sorry, a little bit there. For above 350K and a 680 plus FICO, which you may or may not have that, and I'll let you know via email, and I'll have maybe some ballpark numbers. Not always will you have a ballpark number, but that's okay. That's what happens when you're looking at these types of funding solutions. In addition, we will need to see the 3 most recent business tax returns. Don, there's the answer. And 3 most recent years and year-to-date financial statements. Sometimes 2 years, but most of all 3 years. The SBA, they go off primarily off your credit score and credit history. So don't just look at it, hey, I have a 700 Experian. Yeah, but we're looking at all consumer credits for a lot of the time. And then we're looking at business credits, which I'll get into. So it goes off primarily off of credit score and profitability of your business with at least 2+ years of profitability. Most recent is best, is what I like to see. So if you had a 2019 profitable, 2020 you weren't, 2021 you were, it's just fluctuating. It just, a lot of the times you will be declined, even for the lower express funding. So the most recent 2 years of profitability is best. And I know we all deal with COVID. I was hit with my multiple businesses, so I get it. You're not alone. I've been in your position where I've received funding, government related or not. So I know the different types of services. This is a big reason why I actually got into this industry. I wanted to know from the very beginning. And after running my businesses, I came full circle to finally doing what I wanted to do. So note, if you have already an existing business loan that is not EIDL related, we can refinance, consolidate merchant cash advances. Sometimes it goes up to 2 MCAs, lines of credit, term loan. But other lenders will look at it and go, yeah, we can do the 3 to 4 positions you have because you have low remaining balances. Okay, no problem. And then actually helps consolidate and gives you a better remittance schedule because now it's all underneath one. It's all completely paid and probably perhaps put all underneath one. And then you have that 7-year, 3 to 5, 5 to 7, 7 to 10 year working capital. Benefits, you get a monthly repayment, fixed interest rates, but could be variable interest rates as the market keeps shifting right now. And I have to make an adjustment on a few of these numbers, but this is one example of that document that I created some time ago. Now, prime rates, and it's been adjusted, so just so you guys know, this is the most relevant. This is not like, oh, you made it a while ago. It's not. No, it is. So with the adjustments here, so fixed interest rates could be variable interest as the market keeps shifting right now, sometimes every 90 days per quarter if need be. Prime rates, +1 to 3.75 or 1 to 4.75. You saw what I said earlier about prime rates +2.25 to 2.75 +3.75 to 4.75. So more likely in that range in this market. So yeah, base rate if you're an exceptional client, but even at that, I would even say 7.25 more so, but more realistically 7.5 to about 12.75% in a market like today. But as the prime rate goes up, and even in cases I've seen it go from 12.75, certain clients from 13.25% plus, a little bit more. And that ends up happening, especially with the lower types of funding amounts and what you have cash flow wise. So even a little bit higher than certain numbers based on variable interest. And in a market like today, you'll see that prime rate being a higher interest as opposed to variables because it gives you room for an adjustment. So per quarter basis, before that end of the quarter, there's an evaluation on the market in your industry and what we need to look at, if anything, and then increase if necessary. And then we have that wiggle room to work with. And so there's a lot of stuff that happens behind the scenes that we do that you guys don't know. So prime rates, you can see that. You can still apply if this is something you have with an EIDL loan. It doesn't affect it, shouldn't affect it, liens, and we can look at that, but it should be good. If you have merchant cash advances or other loans, SBA can consolidate. We just have to see how much of the remaining balance you have, and then we can usually take a lot of what you have off your table and put it underneath one. Approvals, factor all documentation, like personal and business tax returns, year-to-date financials, profit and loss, etc. But commonly you see between 10 to 15%, if not 20% of your annual gross sales / revenue approved for. But since it is SBA related, we factor more, like personal, business, year-to-date financials, profit and loss, balance sheets. And so you see a higher approval in a lot of these. And if you have collateral that can help service the debt and take that and rebound and then sell it however we need to, market appreciation or depreciation, etc. There's an in-house soft credit pool to start. This is what I recommend. This is why I work with the best lenders. And then we have more projects in the works. We're doing a lot more in-house setups than just going directly. Stop this whole like direct SBA. I know a lot of people, they go to the SBA link on the URL and then they do it that way. That's only going to cause you headaches. And the reason being is because you don't get the most flexibility in terms of the right preferred lender. And you don't know if you're getting a preferred lender. Do you know if they're actually the best in your industry? Maybe they're just bidding on each other and saying, hey, I'll take this file, but you didn't get looked at the right one. Instead, now you have some old person with an old credit facility, old underwriting team who just doesn't know your industry well enough, who doesn't give you, if any, discounts, if any, doesn't give you, this gives you a prepayment penalty that shouldn't have been given, or they didn't give you enough of a long term, or they didn't accept what you had to bring to the table with in terms of collateral because they didn't know how to sell it or in case of a default or whatever happened. So there's a lot, that's not the only thing. That's not the only thing, excuse me. There's a lot more. But as the process goes on, as we saw soft pull in-house setup, we can do a hard pull as it goes towards the process. And a lot of the times you're well known about this beforehand. So underwriting checks, again, credit is what gets people. SBA 7A loans are based on profit. You have to be profitable for at least 2 years, sometimes at least 10% profitability, but most recent 2 years is best, at least profitability. Sometimes 10% they ask for. In certain industries, they'll say 15, I need 10. You're in automotive, or no, you're more so in car sales, used auto sales. Hey, we need to see at least 10% profitability. There's a few other things. Low debt to income ratio, less than 43%, but that's putting it very conservative. I would say less than 30%. I won't get into personal and business credit cards right now, but like personal credit cards, you should be using at least 1 to 7% utilization. And you're like, what? Can't do that. Well, yeah, but that's concluding that you had multiple personal credit cards. So if you had a total of 1 to 7% over different limits, or you're probably at limited 50,000, 40,000, wherever you are, yes, keep your utilization low, use different cards. So the factor of what gets reported is towards your total, but you get to see individual circumstances. And lower numbers are best, low credit utilization, less than 30%, but keep it very minimal inquiries, nothing bad on your credit reports. Like late payments, that will definitely a lot of the times turn down a file. History of bounces, and then late payments, that can be relative to how long ago it was. So if it were like a year ago plus, that okay, year ago more so, better, we can understand that. History of bounces, negative business cash flow, tax liens, and so on. Hard credit pulls for this program, but we can do an in-house underwriting look before pulling hard pull. Plus, you have to demonstrate significant use of funds for growth and expansion, not just recovery like idle loans. So that's where it differentiates. It's not just you were hit by COVID hard, we're just going to give you money based off of that instead of growth and expansion. So it's kind of vice versa. You'll need business credit established, at least have a decent paydex score, and bill with 3 business credit bureaus. So make sure you have reporting trade lines. I'd say at least 5. 3 can be sufficient as long as your personal credit can outweigh that part of your business credit. And business credit is just very huge, guys. You're looking for an SBA government-related loan, unsecured term loan, lines of credit. How much business credit do you have established? Are you monitoring that? Do you not have any? So I'll leave a free business credit building video series down below in the description. Pick that up, learn more about it, and I'll also talk about the 0% interest and how that can factor in. And have some accounts reporting, have some trade lines, vendor credit building. You have revolving lines of credit, installment loans, personal loans, mortgages. I know plenty of you do, business, personal wise, and is it reporting is another question. You don't want to just make sure you get set up with DNB, Equifax, Experian, and you're not monitoring it and you're not making the right type of purchases. A 155 plus FICO SPSS score business liquid credit, but you sometimes see at least 140, if not 145, sometimes as low as 135, 125. But right now in this market, even for express loans, we can have a little wiggle room, perhaps 140 to 155 plus. But 155 plus is what you want to shoot for. With FICO SPSS, is not something you can easily see. We can make a determination of that, personal and business liquid credit. But sometimes you can override this with when you're getting over 350K, and if your cash flow looks clean, you can show strength in your business experience like you have in your FICO credits, revenue, and more, then yeah, we can try to overlook that a little bit. Collateral, it's not primarily the part that the SBA uses to determine if you get approved. Rather, it's cash flow first, equity, liquidity, and then it's collateral. So if your cash flow is strong enough to service the debt alone, yeah, the lender will not want to take collateral, but they'll want to see what kind of assets do you have on hand. And this is why you're asked for things like personal financial statements, different balances. What kind of assets do you have on hand? Maybe what are you projecting to have? What kind of equity would be out of that? What kind of liquidity? What do you have cash on hand? So collateral. So if your cash flow is strong enough, that can help service the debt. But if to a degree, collateral is something that the SBA can require and will require its lenders to pledge. The borrower should pledge. Collateral can take on all shapes and sizes, like putting a second mortgage on your house for the lender. You can also put a UCC filing on equipment. There's unpaid invoices, inventory, leasehold improvements, not one that a lot of people see. Sometimes it's not fully collateralized. The lender may require a life insurance policy for the term life or other real estate you own free and clear. So that's key there, free and clear. Or if you don't own free and clear, we might put a lien on that / those properties that you have or whatever you have to the table. Any loan over 25K is usually secured with collateral, but it's not always a necessity. That's a misunderstanding that people have. You won't get declined for lack of collateral and for having a limited amount of it. And it doesn't mean we're not interested. It can at most means a hard no. And even if you don't have any or enough, the lender will at least ask for it. You will personally guarantee if you're 20% or more of the owner. Also, don't have these. Public records. No bankruptcies or foreclosures in the past 3 years. No outstanding collections, no open tax liens, no recent 30-plus day late payments. So that comes back to, hey, how recent? Cash flow, sufficient business and personal cash flow. But again, when I want to come back up here, we're going to look at reports regardless. So if we're seeing you don't have a recent 30-day late payment, but like 3 months ago you had like 3, 4, 5 of them, and how big they were, it's another question. Were they removed? Did you withdraw anything? Did you get it cleared? Well, okay, but you show us a pattern. Well, how can we know that this won't happen again? Basically. So cash flow, sufficient business and personal cash flow to service all debt payments, demonstrated by 2+ years of tax returns, credit reports, interim financial data. SBA specific criteria, there are no felonies, no delinquencies, and or default on government loans. So I've had people who, it's crazy all the situations and creativity we come up with in this industry. And I'm a very mathematical minded, scientific person, systems first. That's my motto. I'm a systems person, mathematical, scientific, and I'm a broker. And you're like, how did you get into this field? I worked on digital marketing agencies. I did affiliate marketing. I did quite a few projects, and I worked in a 9 to 5 role with helping budgeting and systems. And I always wanted to do this. And so my way of doing all this, if only you would know what's going on up here as an introvert, but there's so much. And so we're looking at all these things, and I have people who they default, maybe by their fault, or it's somebody else who scammed them. And I've had situations like this. And it's unfortunate what happens. It's just it lights a fire under me because so many people are taking advantage of. And I was one of those who didn't fall for that. Like, I was so close to. We see all of these offers, we get emails, text messages. Who do we trust? Who's reliable? Who's been in our shoes? Who understands our pain, our industry? And I've helped service every industry. In my 9 to 5 life, I worked in warehousing, manufacturing, construction, in business roles. And so, excuse me, that was in my younger 20s after school. And so I understand the labor intensive work that a lot of business owners put themselves in. And even if it's not what it takes up here, I worked hard mentally as well as physically, more so in my younger 20s. I wasn't built physically to work hard, but I took some of those roles for things that were happening back then and the circumstances. But anyways, we can get creative. People who've defaulted, there's paperwork backing it off that you've been removed from the data merge, and There's so many things we can look at. You can't use the SBA 7A loan for no investment properties. Okay, so I have a lot of clients right now, and I will continue to get clients. I have property I want to invest in. Can I get this? I have it for an Airbnb. I'm a builder, or I'm looking for more residential property. I'm looking for a commercial property mortgage. Well, we'll get to that point. But no investment property use, townhome, single family, multifamily, fix and flips. I can go on. And I listed some of them here. Apartment complex, single family homes, or any kind. Let me put this here. Or any kind of commercial real estate that is not owner occupied. So owner occupied, yes, SBA 7A loans, we can look at that. And I'm not going to get into the whole SBA 7A loan interest rate on commercial property mortgages, and we can do that. I have a different video that I'll try to link you guys to down below. If you're looking for a commercial property mortgage, you have an option like an SBA 7A 504. It may make more sense to do an SBA 7A because of the CDC and commercial use of it, and then the local community side of it, and what you can get approved for. So the SBA 7A may make more sense. And there's also traditional real estate financing, commercial property mortgage. So if this doesn't work, or the other one is preferred because you're set up differently, and you're looking for land that you have, what's the value? What are we looking at? Then we do a ground up construction, turn that into a commercial property mortgage. Whatever you're trying to put on that land, then we can do fulfill on. Documents that are needed. So this is the part I need you to pay close attention to. I know we're past 30 minutes, so it looks like we're going to go a little bit longer. But if you're getting value out of this, please give me a thumbs up in the comment section. I try to come back to these at the end, maybe not the same day, but I'll try to comment. And again, that questionnaire form will be down below in the description. And if you are, again, getting value out of this, if I haven't said it, please share it with others who you feel will get value out of it. Let them know, hey, this isn't just like any other person out there talking about SBA loans. He's been there, done that. This guy's been in our shoes. He's been out there looking for funding before for his businesses. He's actually received funding. So he has a better idea. He knows what he's doing. He's not going to scam people. He is legitimate. But where people cross the line is they just don't fully understand this, and they want to put the blame on someone else, and they can't look at themselves in the mirror for the fact that they don't have the education. And it's not always your fault. So don't blame yourself. So I say documents needed. Please email them to me. If there's an email that I send you this, email them to me here. I'll safely and securely store them. It could be a Google Drive usually, or wherever it needs to be, but I organize this, and I'm going to follow up with you. And if you cannot take the time to send me this documentation, if you're just twiddling your fingers and picking your nose. And I get you're not, but you're working in your business hard. I get it. But if you're not, like, what are you doing? Like, why did you even start this? When you come through me, you're not just getting anybody. I'm not here to have my energy and time wasted. Like, you don't want yours, don't do it to me. I put myself in your shoes every day. Psychologically, logically thinking, the numbers, what's in the best interest for you? I'm always asking myself, who is this person? Secondly, who are they in their business? How do they operate their business? And then I'll look at what is in the best interest for them based upon the details that I've been given. Logically, I'm not going to make a personal decision and say, well, I didn't like you, so no. Okay, the numbers make sense. Now, sometimes there may be one little number, like I spoke with an individual today, and if you're watching, you know who you are. There's sometimes a number here that I may miss. I may have left out a number, so the calculation just looks a little bit different. But I do a lot of this every day, and I'm very precise. It's just once in a while, and it's very, 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 very rare. And that happens probably never, like once ever, where there's a little like calculation error on my part. So it happens, and sometimes I need to get moving on a few things, and that's just what's expected, but I will give you the best. So we're in this year of 2022. So think about it corresponding to the year we're in. 2021 business bank statements, that's the previous year, so 2022, leading into 2023, guess what? Will last for most likely 2022 business bank statements. And then here, 2022, recent 6 months of bank statements, and 2023, we're just over that year. Then we'll also ask for 2022 partially, and then 2023 if need be. But if you're fuller in the 2023 calendar year, okay. 2020 and 2021 profit and loss and balance sheets. Again, that'll correlate to the year we're in. So 2023, guess what? 2022, 2021, most likely. Year-to-date profit and loss and balance sheet, at least through quarter one through, since we're now in quarter three. Got that. Usually that's what we'll want to see. Supply what you have on hand, but you should have that done. If we're looking at your business as an owner, and you can tell me in the comments, like I do this myself. I look at things every week, not even a month. I don't visit it every 90 days. Usually every week, I'm looking at my numbers. Even not just on a year-to-date, like on a monthly schedule. Yes, that's different. But I'm looking at my numbers in my business and what I'm profiting, gross profit margins on a revenue scale. And even I break it down daily. And then I go, okay, at the end of a month, what have I done? What do my financials look like? Yes, it may be a little extent to look at it weekly because you don't have that. But to look at it per month, what you're making, and then revisiting those profit and loss statements and seeing, have we been profitable? Okay, well, how do I have to adjust for the second quarter, for the fourth quarter, third quarter, first quarter, whatever it is? But most business owners, they don't take the time to do this because maybe you're operating everything and you don't have somebody who can take care of this for you, the finances. So it's very important you guys understand that. Previous 3 years of business and personal tax returns, aging AR, AP reports, accounts payable, accounts receivables, if applicable, if you have that, not all industries will. Business debt schedule, if you have debt, and if not, okay. But we may still need a little portion of it filled out, like not applicable, no debt, whatever. And sometimes we don't. But if you have your own business debt schedule, a lot of the times if we do an in-house setup, we'll want that to translate into our own form that I have you fill out. Application, and sometimes it can just be fine with what you have. Application, send me a hello sign, and I'll tell you if I have or have not attached it to this email. So please fill that out. Everything needs to be filled out in that email. And I won't get into what that looks like right now, but an application, hard copy PDF, non-digital. What are you doing? You're filling it out from top to bottom. First, last name, doing business name, doing business as, your business name, everything, your phone number, contact details, and yes, SSN, that is social security number. And it is very safe and secure with myself and who you are going through. So don't think that's something that you don't want to express. And I get it. I completely get it. But to make this frictionless, less resistance because I don't want friction. I don't want resistance. I don't want to do this whole back and forth thing. Or, hey, you didn't submit the social security number. Yeah, but I have it in my tax return. Just look at it there or look at it somewhere else. No, that's not how it works. Or you're looking at like, hey, you can see my profit and loss on my tax return, so you can look at it. No, not completely. Or we just needed to see more. So we need its individual documents. We can't just say, hey, we have everything underneath our business tax returns. That's where you should be able to see it. Oh, no, that's not how it works. Not only for the numbers, but for the lender, myself, to look at it individually and see everything. And then I'm going to readjust numbers based off of all. So please have that. Can't express how many times that's happened to me. And then personal financial statement form, that is something that I will have attached. And then a debt schedule, depending on who we go through, I will have that attached for you. So if you meet these requirements, and read this very carefully, and are willing to be patient enough to send me your documentation via email for what is asked for up above, and you don't mind waiting months to get your funds for the SBA, then we can explore this option. Also remember, we can evaluate you for the term loan, the cash advance, and or the line of credit. So we can get you those funds much faster and earlier. If you have a project, you're like, oh, I need to get this done in a month. Like, no, 3 weeks at most. Okay, what can we get you? Boom, simple. And then what happens? You get approved for 103. Let's say you get approved for 500,000. Well, you had 12% interest for that line of credit. You only paid 6% up to about what we have. Well, we're going to consolidate that. So realistically, you only paid 3 to 6% interest on that line of credit. Whoa. So you're telling me that term loan that I'm supposed to be paying 15.5% because of my risk, I only ended up paying about 6%, 7%? Well, yeah, more or less. If we are able to get you that SBA loan, so, oh, that's how you do this. So we can evaluate you for the term loan or either or those options. In the meantime, we're still evaluating you and put it all underneath one if need be when we consolidate. And it won't like raise the limit, all that. We can put it all underneath one in most cases. This usually doesn't require collateral, and collateral isn't the SBA's first look. We've already went through that, so I'm going to kind of skip this. And you can refer back to this, rewind it, and I have other content down below. I've explained the rates for the cash advance, unsecured term loan, and usually I'll show you how those numbers, if there's a ballpark number, not always, for those individual services. But you can usually expect a term loan between 1 to 2 years, sometimes 1 to 5 years. But those 1 to 5 year term lenders, those are like hard pull right away, not usually soft pulls. And so they don't always lend past 3 years either. If you're like looking for 3 to 5 years and it's not an express loan, at least, like, what is the return on this investment? Like, are we lending towards equipment? Do you have, like, you should be like doing over $1 million, 6 figures plus per month, if not 7 figures plus per month, to say, hey, we're going to give you 3 to 5 years instead. And the return on this investment makes sense for us to give you 3+ years, and you're in the right industry. So don't always expect past 3 years, even 3 years with term loans. Use this as bridge money. Sometimes it can get pushed out for the most extreme circumstances. It's 1 to 3% per interest per month. And a line of credit can be 1 to 3% interest per month. Depends on the type of lender. So it can be associated at a 0.69 to a 1.39 or so percent if we're amortizing it on a weekly schedule. So I will have to readjust depending on the lender for you. And so just do some quick numbers. At 1% for 12 months, that's 12% interest. And it depends on the withdrawal fee. So if you had a 3% withdrawal fee, how much that would be associated to the overall amount that you're getting with principal and interest on what you're associated there. So I don't want to go too off topic. I can do some of those numbers for you, some ballpark numbers, and what it would look like as an estimate per week, per month. But just know with the line of credit, you get approved for less than a term loan and an advance in most cases. And the interest, though, it keeps it low. So you can withdraw and use those funds whenever you need to. And I'll leave that down below. I think I have some other options on lines of credit, but fill out that questionnaire form. The cash advance being 6 to 24 months, and usually at 1.19 to 1.5 or so factor rate. Sometimes it's at about 70% plus, because you have lower revenue, bad credit. But again, it's not like you need to take them, and we can evaluate you for the SBA solely instead. So if you can please send me all this, Boom, I'd greatly appreciate it. You can reply back to the email if I send it to you. In this next part, I'll likely tell you, okay, if it's this lender versus this lender, if you're willing to be patient enough, I already went through some of this, so I'll skip this. But hey, I'm going to need you to submit a digital application. Can you do that for me? That's the question. Like, I'll time all of this. Don't think I don't. I do this every day. I know my stuff like that. And I don't have any, I have like paperwork here to guide you guys through some examples I don't even have to look at. Like, I can do like better concrete numbers, but if I'm doing like an adjustment, then I can work off that. So the thing is, if you are not going to submit that documentation, it's okay. You don't have it. It's one thing. You don't want to take the time to do it. Okay. Do you want lower documentation services? All right. Cash advances, lines of credit, term loans without collateral. Okay. Well, we can look at those options. You don't want to have to give up collateral. Doesn't make sense to do it. Okay. You have unpaid invoices, accounts receivables, invoice factoring, more control. Yeah. You can give up. You still have more remaining. You can predict what you'll get month to month. So that's a better way of going at it. And that's what the SBA primarily likes. It's unpaid invoices, and they look at everything else. Sorry, phone call. But just understand that there's a digital application, a component to it, and then we may need a hard copy PDF. It's just how it works. It's not less intensive. It's supposed to be more intensive for a reason. You're getting government funding, let alone you're getting a business loan, like business line of credit. Cash advances are less because they're not technically a loan. They're based upon your future receivables. And the way that's all scheduled, it's different. Now, in terms of, I want to finish up here before an hour, but let me see. Let me make sure I didn't miss anything on my other tabs that I can transfer over. That's sensitive information. You guys can't see that though. Can't show you guys that. It's a few clients where we're getting them term loans, lines of credits, and cash advances. And there's a lot of other products over here. No, I don't want to spend time on the business credits. Oh, I will a little bit. But before I do that, down below in the description will be that questionnaire form. So I will show you that now. Let me copy and paste here. So down below, you'll see a form that somewhat looks like this. Get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized email response for your best funding option and options. Plus, you get a free 6-step pre-approval lending checklist that'll get you approved for funding much faster. And if those of you in here who have offers, like if you're an individual who says, Michael, I've been given offers here, what can you do better for me? A lot of the times we can be more competitive and aggressive, especially with the lenders you have that are like not well known. And I get people who like send me their lenders and I go, that's not legit. That's just a pre-approved offer. Even if you were given an offer, closing is going to be burdensome. We get happy because we feed into the emotion. Look at Credit Karma. People still send me I'm looking at FICO 8, FICO 9s, Advantage, Vantage scores. I want to make sure it's the right score, not the ones from Credit Karma. I want to know, okay, but when you go there, you're like, hey, I was pre-approved for a credit card, or you go to a bank and, they follow up with all of that. You have to be very careful on pre-approved and making sure that you're understanding the difference too with cash versus credit and what is king. Cash, credit, you have Bitcoin, currencies. I know I spoke to a business owner today, had a lovely conversation with him, and he has a lot of knowledge, I would say more than I do, and how invested he is in this. And he shared with me a few platforms that I'm going to be taking a great look at. And I built a great personal and business relationship with already. And if they have any questions, they can ask me, and vice versa. Hey, I took a look at this and this looks interesting to me. I want to dive deeper. Cool person. Honestly, respect them and what they do. And it's amazing. So just understand those things. And down below here, it'll look like this more or less. You can fill it out in less than 30 seconds. And that's going to show you how it works at Viral Funding Solutions if you guys want to visit that. But let me show you this first. And I love it when people ask me like, why do you talk sometimes slower? Like I'm not a speed talker at all as an introvert, and it's because I'm a very meticulous person. Like my mind, like I slow things down. If I'm working with numbers, whether it was in school or in a real world setting like this, it's like I'm not chattering. I'm not a salesperson just trying to sell you. I'm not a sales. I don't consider myself a sales quote unquote person traditionally, although we're all selling something, but I'm not. I'm a normal person like you are, just who happens to have a lot of knowledge, has been doing this for so much longer than most people, who will break it down for you and I'll take care of you. I'll be like, hey, awesome. Now I know, like, dang, I wish I would have spoken to that Michael guy instead of speaking to that Brad or Sally or that representative who just told me, hey, just submit an application, just come on in. We'll never know until you send us an application. To a degree, that's true, but not in all cases. So here, it might send you to this, one or the other, fill it out. Non-startup or startup, and just read through it. Non-startup, okay, with 3+ months in business, the other one less than 3 months. And then it brings you to the form. Fill it out. There's a thank you page. You can get started on the thank you page and or wait for me to fill out the questionnaire and send it back to you. But you can get started right away. And so I won't spend time on that because there's another video I'll try to link you guys to down below. Now, the 0% interest for 6 to 18 months. So in between all of this, you guys got to see some of the EIDL loan alternatives, the SBA 7A loan interest rates, the hybrid SBA 7A loan. I have different lenders. That's my number one recommended. I cannot stress that out enough. Like that combination, because would you want to have, okay, even if you didn't consider a bridge loan, you want to at least know what you can get. You probably already know, but you're like, I just want to know what's on the table in case I do need funding right away. I don't want to have to then scramble about 3 weeks in, just waiting to get approved for an SBA loan, and I needed the money today. And you're like, well, you should have at least known what you can get 3 weeks ago. And it won't hurt if it's a soft pull. If it's a hard pull, we would have to actually ask for consent. And we do it legitimately. And it's the best lenders and underwriters. You're working with me, who they know, they trust. I have such an open personal and business relationship with them. I can just turn to them and go, hey, I have a file here with Jimmy, who's in this industry. Here's their circumstances. Here's how it makes sense on paper. All right, this is the lender to take them to. This is what makes most sense to me. I can't get them a monthly, but I can do a weekly repayment based off of their details because of the revenue level and then a few other circumstances that they have going on. Maybe other positions, you're looking for a monthly line of credit, but they won't approve you for that, or they will. And so we have to look at it elsewhere in a different situation. But 0% interest for 6 to 18 months. I'm trying to end it before an hour. That's a business credit card stacking program. This is one where you literally can get 0% interest. Now, whether it's 6 to 18 months, that depends on the business credit card. You can get up to $150,000 when you combine multiple cards. Now, I'm not saying you can't do it with one, but realistically, with multiple. Like Chase Inc. business cards, yeah, unlimited. You can get that with up to about $100,000 in a line of credit. Or you can get it in a business credit card, I should say, revolving lines of credit, 0% interest for 6 to 18 months, normally at the 12% a month range. And that's a great one. I'm banking with Chase, but it's not the only one I'm using, personal and in business. So just know that if you get one with Chase, doesn't necessarily mean that you have to continue to get them there. There are other ones where you can even get a no personal guarantee, but if you're not set up properly, your structure, before you go and apply, and even if you don't have revenue, like they even want to see some revenue too to get you approved for those no PGs and how your business is doing. Over time, you may be able to. You have other cards out there that I'm going to try to make a separate video on all this, but there's like the US Bank card on that one, platinum cards. There are ones on American Express Blue Cash card. That's just one of the many, but there are multiple. I can go on and on about this. But let's say you had these credit lines that you can withdraw, take cash out of, and you have vendor credit. 80, 30,000 on top of that vendor credit, 110,000, 120,000, 130,000, 150,000. Oh my goodness. You could even build up to that much faster in the ways you need to. Credit line, you withdraw money out and you can use that cash. You have cash on hand. So it's kind of like having that liquidity. But that's what can happen. More than 150,000 up to 250,000 and even more so with corporate credit that I won't touch upon. But you can also build your business credit out at the same time. You're working on the fundamentals of business credit building, establishing it and establishing more of it. If you haven't done that yet, there's a point that you're missing. And you need to do this effectively with the right system in place. And you're also getting credit lines and you're getting business funding because you're growing and expanding at a rapid pace that you don't have the credit for. You don't want to use more on your personal credit because you're over leveraged or you just don't want to. Do you guys see how this is all amounting? And how is it amounting? Because you have the fundamentals. See, every business owner has skipped. Even I was in this position. We go from A and then we go to Z. A, my business is set up. Z, how do I get funding for it over time? Wait, we forgot everything in the beginning. Structuring your business to get you actual leveraging personal credit to get business credit cards. And then once you have those business credit cards, disassociating yourself from your personal credit and having everything different and your usage rate on business credit being greater than what you could use on personal credit being capped there. Okay, too much. We have gone over an hour. Guess we didn't meet that goal, but it's okay. So everything will be down below in the description. Quickly recapping again, SBA 7A loan interest rates, they're only going to climb up with prime rates included, plus that 1 to 4.7, 1 to 6.75% more, so 2.7 to 4.75% range. The minimal amount, you may have a little bit of less of an interest, maybe 4.25, especially with those express loans being 25 to 50,000 more or less, a little bit higher, up to 150,000 in some cases, especially express loans, falling between 3.7 to 4.75% in a lot of cases. And then just understanding the differences between getting over 350,000, it may be less, like maybe at most 2.75%, but like even less than 10% overall. But still, we have to factor in fixed interest, variable interest. Sometimes variable is a little bit higher than fixed, but right now you're seeing a bit of the opposite. Fixed rates, we're going to have to get you higher interest rates. And then variable, at least we give us that cushion to try to help. The alternatives, the hybrid SBA 7A loan to the EIDL loan alternative. There are more EIDL loan alternatives. You guys got to kind of see that here. Cash advances, term loans, lines of credits, what we can do to add a combination of equipment funding, startup personal loans, grants. I'm going to try to leave that down below. Credit line hybrid, business credit building. Ooh, I didn't even touch upon all of them. So yeah, that's going to conclude everything. If you got value out of it, please give it a thumbs up. Share with others who you feel will get value out of it. It can be a complete stranger, friend, or family member. But you know that at the end of the day, that's what I will be doing tonight. You can rest your head on the pillow, consciously and subconsciously feel good about what you did. Wake up better, refreshed, not only for your situation, but somebody else's. And if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. If it gets, I don't know, it's getting dark here. I don't know if you guys see the darkness too, but it's just, I don't know. I got to readjust this light thing if that's what it is. But I apologize for that. Appreciate you all for tuning in. Keep looking out for my content. And if you're somebody I have to get back to on the questionnaire form, email-wise, I will. I have people sending me documentation even as we speak. I've gone through some of my emails. And I will take time. I will take a break. Maybe I'll jump on a TikTok later, do a quick live, and I'll TikTok. But it helps people. So I want to make sure I'm delivering the most value out of anybody in this space. And so that is everything from me. Appreciate you all. Talk to you all soon.